Good afternoon, everyone. I'm Diana Murray with ASAP Accounting and Payroll, and we've got a great presentation planned today with some exciting speakers. Before we get started, I do just want to walk through a few technical aspects of this webinar today. Hopefully you are all familiar with Zoom by now, but in terms of how we will operate today, please use the Q&A function on your Zoom control box in order to ask questions today. You can also upvote questions. So if somebody else has already asked your question, you can go ahead and upvote that. And so the more votes, the higher it'll go on the list of questions to address today. And please save the chat function for perhaps any technical messages, like if you can't hear someone or you want to go back a slide, things like that, please use the chat box for. So again, for questions, please use the Q&A function on Zoom. And we're going ahead and get started today. So we have some exciting speakers today. Mark, if you could go ahead and advance the slide. But ultimately, in today's topic of preparing for the second round of PPP loans, there are more questions than answers at this point. We are still very early on in this process. So really the purpose and the goal of today's webinar is really just to open the communication, to soothe the anxiety and the uncertainty you might all be having, and also provide an opportunity to ask your questions and communicate this to the SBA. We're very excited to have Steve White from the SBA Colorado District Office here today with us, as well as Jessica Forgetto and her team from Citizens State Bank. And with ASAP, we've got Mark Betts, and I am also here as well helping to moderate. So we've got kind of a team of people on the call today to hopefully provide some guidance and again answer these questions as there might be more questions than answers. So with that, I will go ahead and turn it over, and we're going to go ahead and start with Steve from the Small Business Association.
Greetings, everyone. Steve White, Lead Lender Relations Specialist for the Colorado District Office of the United States Small Business Administration. I'm very grateful for your time and attendance today, and I definitely will try and be very mindful of your attendance time as we go throughout today's program. As many of you on the call are already aware, a new relief package was signed into law recently where the SBA will play a significant role in the delivery of disaster assistance and recovery programs for small businesses. The legislation, called the Consolidated Appropriations Act 2021, includes over specifically over $284 billion in coronavirus aid for small businesses, as well as a $1.4 trillion fund to the general government for fiscal year 2021. However, that law was just signed last Sunday night, so please forgive me, but we just do not have the specific details yet on program implementation or application timeframes yet. The law actually specified that the SBA has a number of days, depending on the program, to promulgate the rules. In some cases, it's 10 days. In other cases, it's longer. In the meantime, we very much appreciate your patience during this holding pattern. Please know that the SBA and the United States Treasury are working to ensure that the next round of PPP is launched as quickly and as efficiently as possible. We are working to identify changes to program rules, forms, and processes as laid out in the legislative text, and to appropriately update guidance and systems for PPP lenders and borrowers. Having said all that, since we're still a bit premature for full program rollout, please forgive me if I seem to provide overgeneralized answers. I am not purposely being vague. Rather, I'm trying to be honest to the current situation. But I will try and answer any questions that I can without, I will not be guessing or prognosticating or anything like that. I will try to provide honest answers to the questions that I know. We probably will have to come back later and provide a lot of more specific guidance or answers to your very good questions today. So thank you for the time.
Hi, everyone. This is Jessica Forgetto with Citizens State Bank. and I was going to move into a few slides regarding information regarding the PPP loans and what to expect. So there may be some of you on the call today that this is your first time applying for a PPP loan. So part of the bill was they changed to reopen that window for a first PPP loan. That is now open through March 31st of 2021 to obtain your first round PPP loan. There are changes regarding the cover period is in regards to the purpose of the loan qualification and waiver of that affiliation rules and such. But I'm guessing the majority of you have already obtained a PPP loan, and this is not your first time applying. So what's new this time? In regards to like the 60-40 split of use of proceeds, so 60% being the minimum amount for payroll expense, now that 40% can also be used for other items. So in addition to the mortgage, interest, utilities, rent, now it can also be covered operation expenditures, property damage, supplier costs, and worker PPE. And I believe Mark is going to dive in later into more detail on those bullet points. So in regards to what's new this time, the covered period has a lot more flexibility. So before it was simply 8 or 24 weeks. Now you can actually select the end date of your covered period. So that allows you the flexibility when you needed to use longer than your 8 weeks for payroll, but not the full 24 in order to obtain that full forgiveness and use of those loan proceeds. So what's new this time as far as changes calculation of loan amount for farmers and ranchers? So this is kind of attention all Schedule F borrowers, specifically those that are sole proprietors, single member LLCs, or that they don't have W-2 payrolled employees. So now they're going to allow, instead of net income, now they're going to base it on gross income, which will be a huge advantage. It does have a cap though. The cap is $100,000 for gross. And if you take that 100,000, then go ahead and divide it by your 12 months times your 2.5. That would, for example, give you a loan amount of $20,833. So that is an improvement there that was set aside specifically for Schedule F borrowers. It does also appear that there may be a separate application for anyone that is a Schedule F borrower. Also, they simplified the forgiveness process for loans under $150,000. So right now there's the 350S form, but that was for $50,000. We have not seen an updated form for 150. I would anticipate that that would come out soon, but nothing yet. We'll keep you posted when we have something. Also, the EIDL, or Economic Injury Disaster Loan Advance reduction, this was repealed through the bill. So we will work through that with all of our customers. For example, if you had a $50,000 PPP loan and had a $10,000 EIDL, even if your loan was deemed fully forgiven, when the payment came to the bank, we were receiving $10,000 less. Your EIDL amount was deducted from that. That has been repealed. Some borrowers have already repaid that to us, and some have not yet. So we'll have to work through that with each person, and also when more guidance comes from SBA and Treasury to understand how we will request that money, if that will be the bank that will request that on behalf of the borrower, or if the borrower will request that. But we will do our best to work through that with everyone, and we're glad to see that change. Also, on the next slide, the eligibility has been expanded to 501c6 organizations, so housing cooperatives, newspapers, broadcasters, and radio stations as well. And then finally, I think Mark will dive into more of these, but it can never hurt to reiterate them. So as far as eligibility, it's for 300 or fewer employees and that have used or will attest to using their first round PPP loan proceeds, that there was a 25% decline in revenue in any quarter in 2020. And For example, if your business you had your business established for the entire period of 2019, so that entire year, you can take any quarter of 2020 compared to corresponding quarter in 2019. So for example, first quarter 2020 to first quarter 2019. There are other schedules depending upon the time of operation of your business. For example, if it was only in business for third and fourth quarter of 2019, then you can use any quarter of 2020 compared to either third or fourth quarter of 19. So there is a little bit of variation in there depending on how long your business was in existence in 2019, but for the majority of people, it'd be full year. So using any quarter of 2020 compared to the corresponding quarter in 2019. The maximum loan amount available is $2 million, and it's based upon 2.5 months of your average annual payroll. And if you're a hospitality business, you're eligible for 3.5 times of that average monthly payroll.
Thanks, Jessica. So I'm basically going to repeat some information that she just covered. So as she alluded to there, eligibility is dropped to 300 employees or fewer. And there's an affiliation rule as well as there was before, but the people in the hospitality, the restaurants and accommodations, the NAICS Code 72 buckets are eligible for a few things that are different than other borrowers. And just so you know, that NAICS code, I believe, is somewhere on your tax return. So that's how they get that information, if I'm not mistaken. So you may need to, I'm anticipating things that we may start seeing lenders in the SBA wanting to get from borrowers. And so locating your 2019 tax return may be part of it this time because of that NAICS code. This is speculation here. This is we don't know the guidance yet. I should just go ahead and repeat what Steve said. So this is from my read and our read at ASAPs in terms of what we think we may foresee in the future here. So one point I'm trying to stress to people, which Jessica covered, was that you do not need to have applied nor received. Either one is not required in terms of you don't need to apply for forgiveness nor have received forgiveness in order to be eligible for a second PPP loan. And so keep that in mind. There's no rush to apply for forgiveness. And as I'll touch upon later on here, there's another program that we're not talking about right now, but it's called the Employee Retention Credits. And there's a good reason to hold off on forgiveness until you've spoken with your tax advisor in terms of your eligibility for the Employee Retention Credit program. And we'll get to that at the end of the program here. But I know there's a rush for people thinking that they need to apply for forgiveness so they can hurry up and get round two. That, according to the law, it shouldn't be a requirement as we anticipate here. So as she said, at least a 25% reduction in gross receipts revenue for any quarter in 2020 relative to the same quarter in 2019. If you weren't in business in 2019, there's a few new employers that started in January, February, right before the pandemic, a hell of a time to start a business. There are some specific rules in terms of those employers or seasonal employers as well, or employers that started in the fourth quarter or third quarter of 2019 as well. I don't have those on this slide, but there are rules that lenders can use to, in terms of the eligibility requirements there. That differ if you are a newer business. I'm assuming, Jessica, this is kind of a question. Are you anticipating P&L reports? I'm assuming from the accounting software. We don't really know what to anticipate yet, but that's just a guess of what lenders are going to be wanting to see from borrowers. So just thinking about prep here, what you can be prepping until the portals are open for the loans. Anything to add there, yes, Jessica, in terms of the paperwork?
Yeah, that's my instinct at the moment is that I'm going to be looking at a comparison 2020 on 2019 P&L for the quarter that they anticipate
Let
that
me-
they
let
will
me-
have that reduction.
Am I able to interject at this point? This is Doug.
Sir, this is Doug Price from Citizens
Yeah.
State Bank.
Yeah, I think that I'm trying to follow the questions because the panelists don't have the right time. I do think that the most consistent questions are really about the 25%. And so, Steve, Steve White, do you have any sense of whether or not you will generate a form, an attestation that we use, or is it more likely will be required to have some level of P&L from the client themselves? I ask this because most of the smallest businesses are quite, from an accounting perspective, quite rudimentary and may not have easy access to a quarterly view other than their checking account or some other way. So do you have any sense, Steve, about how the SBA will think about making a determination?
Steve's muted, by the way.
And I know we are having
Can
trouble
you
with
hear
his
me?
audio. Go ahead.
We hear you, Steve.
Sorry. There you are. Apologies. Great question. I don't have a good answer for that. I don't know if we're going to look to add a line item to the current 3508 series forms, or if that's just going to be put in the actual platform for submission itself. Hopefully, that's one of the many questions that we're going to have today that I'll come back with an answer later. So apologies, I don't have a good answer at this time.
And then another really good question that relates to the 25%, and it's been common. Do you anticipate, common sense tells me that if you got a PPP loan, that's not going to count as income in the quarter. Do you see any reason that that common sense approach would be different? In other words, I got my PPP loan in the second quarter of 2020. That quarter without the PPP was 25% below second quarter of 2019. Am I still going to qualify because my actual over-the-counter receipts were down?
Yeah. Unfortunately, that's another question that I'm not going to have an answer for you. Hopefully, we'll have something, basically a relative guidance to put out here coming soon in the next couple of days, because we're 3 days away from our 10 days out from meeting the requirements of putting this program into play. But right now, we're going to have to hold off on answering that one. Apologies.
No, I think, Matt, that's a good question. Steve Hemphill, a great question from you. So I think what we'll do is we'll try to catalog anything we don't have answers to. You have 13 questions right now. But again, Lynn Tudorow's question, can you use a contiguous 3-month period, or does it have to be a calendar quarter? Those are all really good questions. And I think we'll have to catalog those and get an answer back. I do think we can reassure you, those of you who are our clients that are already on our list, we'll get a weekly report. Yeah.
Doug, let me jump through here a little bit more, and I'm willing to, I think that if they, or from an accounting perspective, that loan should not be categorized as income from an accounting perspective, but that doesn't answer the SBA's guidance question about how they're going to be looking at that loan. But borrowers should probably start anticipating reviewing their P&Ls in preparation for next week, and in case they, if they want to be first in line, and understand how that PPP loan was recorded in their books, and start reviewing with their bookkeepers to make sure that they understand how that loan was recorded, so that they can anticipate those kind of questions and scenarios next week and be ready for them, to understand how the PPP loan impacts things. I would also go ahead and just look at it based on a strictly quarterly basis, January through March, et cetera, until the guidance change and loosens those restrictions, and see if there's any other restriction requirements going forward. let me just jump into the loan terms. We anticipate, again, this is anticipation, that the average monthly payroll look-back reference periods for the 2 periods of time at this point in January will be based on 2019 and 2020. And from a reading of the law, and until SBA guidance comes out, for borrowers, they're actually going to look at the lesser of those 2 reference periods, according to the language in the law. That's an important note. So they are going to request both sets of reports from borrowers, or most likely will. Jessica can interject at any time. And other things that she discussed earlier, the 2.5 times the average monthly payroll cost, the 3.5 times for those entities. We anticipate the definition of payroll cost to match from the first round, and there was a lot of confusion in the first round. Some software providers were putting out payroll reports that were inaccurate ways of calculating it because it was the way it was rolled out in fast in the fashion we had to, because it was a pandemic, obviously. And whatnot. But there is some language in there, back to your point, Doug, that in the law that I can point to that says that loans of not more than $150,000 for those small businesses with small loans, that according to the law, that and we'll see how the guidance comes out, there is supposed to be a mechanism in place by the SBA so that the lenders don't have to substantiate or certify more than just an attestation from the borrower that they had the revenue loss. Now, they will have to meet that requirement before applying for forgiveness according to the law. But again, these are things that we're waiting for guidance on. So, but there is hope there for small borrowers that have poor bookkeeping, shoebox people out there in the world. So just keep that in mind, just because those are the ones that I know that, and Steve can speak to the programs to address perhaps those that were underserved in the first round. Hello?
Hi, everyone. This is Steve. Yeah, so we're that's one of the definitions we're waiting on, and hope that we can provide that to you all as soon as possible. Is what does that look like? Who are the low to moderate income populations and the underserved? And that'll be based on both population area and for industries. And as soon as we have that, we'll get that map out to you guys.
Yeah, that's great. So like the first time, we're anticipating payroll reports being a requirement, as alluded to, 941s probably as well, to tie out the payroll reports to make sure that they, what we're working on now, just because we don't want to slow down, it's a really busy time of the year for accounting people, as you can imagine. We're working on supplying a payroll report for 2019 and 2020 that looks similar to this, that will show a lot of different categories depending on every lender. They may have, we saw last time that they wanted sick and vacation wages separated, tips itemized, all kinds of different requirements. So this is a pretty generic report that we're going to be putting out for clients. The clients will request, and we can add it to their portal for them to download and supply to their lenders. From an ASAP perspective, clients need to make sure they know how to get into their client portal with ShareFile, and we'll have a queue process in place we're working on now in terms of methods of requesting these from your account managers or from us immediately online. And we'll be working through getting those added to the software as we get it designed. We're waiting for that guidance just in case there's some changes in some of the calculations in here, but it's going to look similar to this report here to give the 12-month average for the 2 periods of time that they can use. Some other items that we discussed earlier was the additional eligible expenses that employers, borrowers can use for round 1 or 2. And these are bigger definitions. I wish, Jessica, I was an expert on these, but I literally just copy and pasted these. I haven't really read through the headlines, beyond the headlines rather. These are expenses to be used for forgiveness, mind you. So but that leads me to the Employee Retention Credit Program. I'm going to touch upon this really quickly as well because there's a lot in these programs. But in the first round of PPP, if we go back, it was an either-or situation. You could either get a PPP loan or you could go the Employee Retention Credit method. And so most people chose the PPP because it was a great program in terms of getting money to employers fast. There's now in this round, they put in mechanisms for employers to go back and get credits, even going back to 2020. That's going to put some pressure on your bookkeepers and your payroll teams because there's going to be most likely a lot of amended 941s that will be required to file to get those credits. ASAP, we're anticipating and happy to do them, but it is going to take some work, and so we're trying to schedule those 2020 credit programs. We're going to go ahead and file the fourth quarter and get it out because it's already January, whatever it is, and then just anticipate having to amend 2020 returns at this point as we uncover the rules of the program as the guidance is released this month. But the employee retention credits are something that we think that it's based on the eligibility for it is different than PPP. You have to show different reductions, and there's also different reductions for each year. This slide right here is touching upon the 2020 credits. We'll send these slides out to everyone so you can study this. I'm not going to read through it. I just wanted to show people that the ERC program is an important program. And let me just kind of talk about one aspect of it that relates to PPP, and that's where we get into your forgiveness from round one. Throughout the last 3-4 months, we've been telling employers, to make forgiveness as simple as possible, go ahead and just show all your line one payroll costs. You don't have to worry about non-payroll costs like rents or utilities. Well, as it turns out, now that they're rolling out this eligibility for ERC, that guidance is no longer the best guidance we can give anybody. And so I would tell everybody who looks at the Employee Retention Credit Program, finds that they're eligible, to really work with their advisor in some form or fashion to help them, and to wait on applying for forgiveness for their first round PPP loans until they've spoken to their CPA or whomever can assist them with their employee retention calculations. Because in effect, you can't report the same wages for PPP that you do for ERC, and so there's more money out there for employers that have retained their employees through this difficult year, and we want to, as accountants, we want to make sure our clients are getting the most credits they can get. But so everyone needs to slow down a little bit until this has been consumed, if you will. There's credits for 21 as well. This is not a ERC webinar right now, so we're not going to answer any questions on this because we're still learning, but it's a significant amount of money in terms of ERC credits. So while we're talking about PPP, I don't want anybody who could be eligible for these credits to not learn about them. So I just wanted to sprinkle those in and again, tell people to maybe think about holding off applying for forgiveness if they've spoken to their tax advisor or whomever can help them with these ERC credits. The credits will be applied through payroll, so we anticipate processing them from a data side, but we won't be able to give that consulting to everyone. Those will be that'll be a separate service line for us once we've figured out this program more. Diana, are you able to moderate some Q&A a little bit, or?
Yeah, I'm not even sure where to begin. We have quite a number of questions. Jessica is doing her best to answer them. I can pick some that might apply to the majority of the audience here. So let me just kind of read through a few of these. Some of these are very specific to a certain industry or a certain segment. So I'm going to try and prioritize those questions that might make sense to most of the participants here. Let's see.
Nonprofit revenue still looks like there's been several questions about nonprofit revenue. I thought.
Yeah, go ahead, Jessica.
For example, there's questions about one person says they're a 501c3 and did not have a 25% reduction in donations. Another person asked they're an ambulance association. Let me scroll back down to, we are a nonprofit ambulance association. We do not really have revenues that are variable except for patient fees. I think that they're still going to be, their revenue, my understanding is their revenue would still be based upon donations or grants, but I was wondering if Mark or Steve.
I think it's top line gross receipts, so it'd be all of the above in terms of revenue categories, if I'm not mistaken. Is that answering? I'm sorry, I was reading some of these other questions while you were asking that question.
That's Mark, this is Steve. Yeah, that's the way SBA sees it. Basically, we're in the position that you tell us what the revenues are, and then as long as you can support that, we're looking at the gross revenue level.
Yeah, all categories. So if a 501c3 is getting different categories, but that's some good guidance that, those in the weeds kind of questions are going to be stay tuned kind of things until the guidance comes out. There's some questions on here about accrual versus cash basis. I'm sure there'll be mechanisms or I hope there's mechanisms for either based on how the business operates on an accrual or cash basis, as long as they're consistently applied to the current period of time and the prior period of time. But again, that'll be something that when that guidance gets released, that I'm sure everyone will be double checking. That's a great question, accrual or cash. There's a question on there about multiple locations. I should caution that locations doesn't necessarily mean a single entity. So my question back to you would be, is that a single EIN? If that's a single EIN, the revenue, I presume, from both locations would be combined before, so you wouldn't analyze it based on a single location, you would analyze it based on the combined entities' revenues. PPP forgiveness for round one is not required of a second round PPP, but if you have gotten forgiveness, you can apply for second round PPPs. There's a question on here about 1099s that I saw 1 second ago. 1099 contractors, Jessica, that would be your Schedule C filers. Is that correct, or where am I going?
Yep, I just responded to him and said that if you have 1099 contractors that you have before essentially considered them an employee, just encourage them to apply on their own. They qualify as a sole proprietor 1099. They can apply for their own PPP loan. The definition of payroll cost has not changed, so they're not included now. You need to stick with your W-2 employees as your payroll costs.
They're not included in the payee loan basis. They're eligible on their own to apply on their own.
Correct.
Yeah.
And one of the questions that had been upvoted was, is there a maximum salary of $100,000 like PPP 1?
I anticipate that because I've seen that 100,000 being referenced all over the place. I didn't see it in the. I mean, that was a big bill that but I would anticipate that being in the guidance that it'll be capped at 100,000 again, and other stipulations probably similar to round one in terms of officers and their impact. The one thing that I didn't include in my slideshow that I'm just going to point out as we're looking at these questions is that the new round, or maybe you did, is the selection. There'll be a little bit more leniency in terms of how you choose your coverage period. Is that correct, Jessica? Do you know more about that? I mean, can I can I choose my start date, or is that just your end date?
My understanding was just end date, but unless Steve has, I read about that through some other material, and it was selecting your end date.
And so, I mean, the reason I ask is because we're going back to that stacking the ERC on top of a PPP, you know, understanding when that kicks in for PPP and tracking that is very important going forward. But overall, I don't want to confuse people. PPP is a great program. If you qualify for round 2, go for it.
The other point I want to make, we have a number of public media entities as nonprofits, and there are multiple forms of income for those of you who are in public media entities. So for example, you have membership that is evergreen at times. You have investment income that might come off of a portfolio or an endowment that you have, and then you have grant funding. And I would say we'll have to look, Meg, at the investment issues, because they go up and down, and after the initial fall got better. But I do suspect that those of you who have revenue, a combination of grant and membership revenue, that if you didn't defer a membership drive, you're likely not to qualify for the 25% down or more. But again, I encourage everybody to take a specific look at their quarterly activities. And as Mark has said, for now, plan on it being a calendar quarter, and see if you have any of those situations where you have deferred revenue because you waited on a fund drive, or if you have unusual revenue the prior year that makes the quarter down. So our experience with SBA is that they have been much more practical than we anticipated. So I think the key thing moving forward is to just be ready to ask questions. Steve has been wonderful about giving us answers as we make decisions, and SBA has been excellent at getting out periodic updates to their frequently asked questions. And so this is the first conversation any of us is really having about PPP. But again, my comment is collect your questions. We have access to great help like Mark and Steve, and run through your lender to get the best questions on the table, and we'll get you the swiftest answer we're able.
I'm going to try to go through some of these, Doug, real quick at the top here. So do we anticipate this being fast and furious like the first round of PPP? Unfortunately, I think some of the vibe coming from is yes. It's been a tough year for a lot of people on that money. I think people are going to start applying for it. Is that what your sense from the bank side? I mean,
Jess, you can make a comment. I think we have a lot of questions, Mark. I think that Steve is a better position to do it. But, you know, we had sort of two experiences. We had the first round that went really fast and was really scary. And then we had the second round where there was money left on the table. So my quick comment is our bank, I think over 2/3 of the people on the phone call today are our clients. Our bank was efficient at getting applications in and done. And so you're never damaged by having a completed app in early, but there will be some queuing challenges moving forward. Our line, however, has been this. You know, the great Sean Connery film, The Untouchables, he says, don't bring a knife to a gunfight. What we've always said is don't bring a gun to a knife fight. Don't be in a situation where you're using a portal from somebody you don't know to try to get a loan. Instead, whether it's our bank or somebody that you do know, work with a known quantity, because these questions are different for every business. And we have to put them into a nuanced answer with SBA. So I think you're benefited by having an early application, all your questions there. But as you know, we're not ready for applications yet. Steve is going to give us guidance through the SBA. And the confidence that you need to have is that we will be swift with our email correspondence to let you know what you have to do to be ready for the deadline or for the application opening. That we can assure you. But for now, I think it's to be as comfortable as you can, but as deliberate as you're able in pulling together the documentation you anticipate of showing that you have a quarter that's 25% or more down, and then being ready when the guidance comes. And I think, Mark, that's the same thing you said. Steve, do you have a comment on that?
Yeah, Doug, that's an excellent rundown, and I would just echo exactly what you just said. Better for a business owner to apply than to not to apply. Let us be the ones who say no. Don't tell yourself no. Definitely go through the program early on in the process. Citizen State Bank was very aggressive in getting their foot in the door to make sure they were ready to take care of their customers, and we at SBA reward that kind of behavior. I mean, because you can see the idea of the program. This program is to make sure that we try and close or fill all the gaps that were not closed or filled in the first two renditions of PPP. So we're coming back again, trying to make sure that we're shoring up our bases. We've broadened eligibilities. We've extended the safe harbors. We've tried to make sure that we're including everyone, and especially taking a hard look at those who may have been skipped over in the first process. So definitely, I would encourage everyone on the call to be ready when we do open the door, so to speak, to fill out the application, and then we'll go from there. Unfortunately, for specific guidance, we're still waiting on that, but just know that this is our attempt to reach down and give everyone a sort of level the playing field, give everyone a fair shake.
Great. There's some questions about loan modifications for round one, which is part of this new law. I don't know if can't remember how much we touched upon that, but certain borrowers, because of the first round of PPP, back to those Schedule C filers, I keep using that as an example. Let's say you're a Schedule C filer and you had payroll and you got the loan based on your payroll, but you weren't able to include your Schedule C. Some lenders, I think Citizens, y'all are one of them, were able to go back for those borrowers and make some modifications. And I think there was some lenders that had some pushback on doing modifications. And I think the law basically is now confirming that if a PPP round one modification is if there's someone eligible for a modification because the rules had changed after they had applied for their loan or received their loan the first time, that there is going to be a mechanism for borrowers to go back and get that round one money. But as I think Alexander, you and I talked about this earlier, if that's case, if you fit that case, you need to look at how, should I do that or should I just go straight to round two? Or, because I've got to look at using round one and how those rules apply for if you've got a modification for one and you're eligible for a round two loan. You've got some decisions to look at in terms of a borrower there.
The other caveat there, Mark, is if the PPP borrower did not elect to take the full amount that they qualified for. So just for easy math, if their 2.5 months of average monthly payroll created a PPP loan amount of $100,000, but they elected to only take $75,000. Our understanding is now that they could apply for a modification to increase that. I think we have to weigh the risks with each specific person to decide if that's actually something that they'd want to do. But that is mine and Alexander's understanding.
There's a great question on here, and Alexander, you're typing your response, but this is a time for us at ASAP. Citizen State Bank, y'all just opened a branch here in Telluride. Congratulations. Sorry the ribbon cutting wasn't as big and grand as you wanted. But are you taking loan applications from non-Citizen State Bank customers?
Yeah. I hope I'm not muted. Yeah, regionally, we're certainly happy and want to serve our community. So the quick answer is yes. If you're in our area or you're in some of the areas we serve, we'll will be helpful to you moving forward.
One question about the EIDL, the 10,000 advance there. Are we going to be required to pay that back? Based on the understanding of the law, there's supposed to be a mechanism to where there's an adjustment so that won't have to be paid back. Is that correct, Jessica?
That is correct, yes. So we have some customers who have already paid them back. We have some that were considering paying, they were going to pay back or were in the process of paying back when this bill was released. And they do not have to any longer. We're supposed to work with or wait for more guidance to come from Treasury and SBA on how we will actually request those funds back for customers who have already paid back, or request those funds to pay off the bank.
And there's a question, Jessica, about if you didn't apply for a first round of PPP, but yet from a technical standpoint, could they apply for both rounds of PPP?
Yeah, this is where it gets a little gray. My understanding is that you can apply for a first round now through March 31st. But you have to use, so if you use those proceeds, for example, in 8 weeks, the original covered period, then you could apply for PPP 2, as I read it. Steve, if he has any comment, would be if he anticipates it being the same way. I guess you're taking the risk that the funds don't run out for PPP 2.
Right. Yeah. So we're still working that out on our end. Right now, what we're going to look at is there's a very limited caveat for those who are in the second draw phase. So those customers who have already applied for and received an initial PPP loan. So for those who have not applied or did apply and were not available to get their PPP loan, but now are eligible due to the broadened rules, they'll be looking at the initial PPP loan amount. So that's where we're going to look at that. As far as a customer being able to apply for both the initial round and the second round, that we're going to have to wait to see what's to be seen on the answer to that. I'm adding that to my list to send it to the boss, and hopefully we'll have that answer out to you guys here shortly. But let me get back to you on that one.
I will do my best to answer Hannah's question about guidelines surrounding loan audit. I have not seen any update, since they're not going to allow a loan to be made over $2 million if they're going to reduce that loan audit threshold. I guess we'll be waiting on that from the Treasury and SBA. One item, just as an FYI, loans still do go under what they call under review or lender review, and then additional documents are requested, and the lender has to provide those. So our experience originally was about 1 in every 19 loans would get pulled into that bucket. We've had a pretty good success rate at getting our loans submitted for forgiveness and approved. And it still tends to be about 1 in every 19 loans gets pulled into that lender review. So even though your loan might not be large enough for a true audit, your lender may ask for additional information.
Yeah, I've gone through one audit, and they do ask for additional information. But that's good to know that it's been pretty streamlined. Oh, good question. Is there a deadline set for forgiveness for round 1? We told everyone we're telling everyone to hold off a little bit. I wish I had Tracy.
I thought it was 10. Last I knew was 10 months from the end of your covered period. that was not changed last I knew.
Okay. We'll double check on that for you, but that sounds about right. So that'll give you time to get through the first quarter before submitting that application, give you time to digest the employee retention credit eligibility and anything else going on. Question on here about any impacts of EIDL in terms of eligibility. I don't anticipate any. I mean, EIDL loans are not, again, they're similar. We'll need to check some guidance here, but I don't think EIDL, they changed the structure on those as well. Are those considered income, or are those not considered income? And I think they're not considered income, but that'll be something to double check once guidance rolls out to see if that any of those EIDL payments, are they considered impacting your eligibility based on gross revenue.
I do believe the new bill also provided more money to the EIDL program, and that they increased that dollar amount.
I was pretty certain that the new bill. I also thought that something we didn't touch upon. I'm sorry I didn't at the top of this. PPP loans are not considered revenue, and the expenses are now deductible. That was something in the loan originally. So that was a big win for all small businesses and everyone that took a PPP loan in terms of impact for small businesses. The revenue is not considered, the loan itself, the loan amount was not considered revenue, and your use of the funds related, the expenses can be deducted by borrowers as well. And I thought how this relates to EIDL, I thought I remember reading that they included that revenue caveat in there in terms of the EIDL loans as well. But that's worth double checking. All right, Diana, how we doing?
I think that pretty well wraps it up. I'm sure we could stay all day and answer questions, but we will be sending a copy of this presentation out to all participants. So we should give us some time, give us a day. It does take some time to get this recording prepared and up there. You are actually able to watch it on demand right after this, but we will send a clean recording to everyone tomorrow. So thank you so much for everyone's participation, and thank you to all of our speakers and team behind here that have been feverishly trying to digest all of this that comes out. Steve, thank you so much for your time as well.
Diana,
Absolutely.
I just want to say a thank you. Diana, are you still with us?
Yeah. Mm-hmm.
I just want to say a thank you to Tracy, who's worked so hard this year on all of our PPP support materials. She and her family are going through, sadly, a situation with COVID, and she's not here with us, but we've relied on her. I've relied on her immensely, and I just want to take this time to say thank you one more time to Tracy.
Absolutely. Thank you, everyone. Have a wonderful day. Go ahead, Jessica.
I was just going to say, Olivia and I at the bank have relied on Tracy immensely, and our thoughts and condolences are out to her and her family. So.
Thank you. Thanks, everyone. With that, hope everyone stays healthy.